Cool. All right, so we can go ahead and get started. So thank you again, everybody, for being here for the understanding and building your financial credit. Cliff, I just want to start out. So again, my name is Caleb Bolaños. If you don't know who I am, I'm a retention specialist at the AC, and I have kind of like a passion to talk a little bit about this topic regarding credit cards and credit score and credit reports, all that stuff, because I have some history with it. I've been impacted pretty negatively in the past because of something, and I learned a big lesson. I've taken out some credit cards. I've benefited from them before. I've been impacted negatively from them before. Student loans I'm still paying off right now. So all of those things contribute to understanding your credit and also learning how to build it and avoiding big mistakes. Okay. All right, and I'm just omitting a couple more people here. All right. So once again, the Cliff evaluation right now is in the chat. So please make sure that you complete that before the end of this, or by the end of this this Cliff, and that's how you're going to receive your credit. Okay. All right. Cool. So moving along, I'm going to first begin with some true/false questions. All right. So I'm going to ask that you all either put it in the chat, or if you can, please just raise your hand, just say it. But let's see if you all know any of these, okay? So the first one is true or false. My credit score and credit report is impacted every time I request a copy of my credit report. Is that true or false? Okay, I'm getting true, depends on the report, true. Okay, so this is actually false, and I'll tell you why. So you can get your credit report and your credit score at any time you want. That's your right, okay? It's not always going to be impacted. Now, I do want to be clear on this, all right? So even though you can get your credit score and your credit report for free, it's kind of different, right? Because there's a thing called a small inquiry and a large inquiry. Okay, so a small inquiry is when you yourself are requesting your credit score and report. That's free. Okay, there's no impact. Your credit score is not going to lower. There's nothing wrong with that. You can easily get that. Okay, my favorite way of looking at that is Credit Karma. Okay, that's what I use. There are different ones, but that you can access those things, but that's the one I use. Okay. However, there are harder inquiries as well. Okay, this is where if somebody else, not you, but like a lender, a banker, somebody is asking to see your credit report, then that's considered a hard inquiry. That's where, yes, it is going to be impacted on your credit score and your credit report. Okay, because that's a little bit more of a thorough investigation of all the financial things that are on your account. Okay, so that does require a little bit more. And so every single time somebody requests a hard inquiry, then that is going to impact your credit report. Okay, all right, the next true or false question is, having too many credit cards is bad for my credit score and report. What do you all think of that? False, yeah. Okay, yeah, that's good. That is false, correct. So really, you can have as many credit cards as you want, all right? There's no limit, right? Perhaps there might be, depending on your job, your income, any of that, but absolutely, you can apply to all the credit cards you want, okay? Now, of course, it all depends on how responsible you are with them. If you're very responsible, you're paying back your payments, you have no debt, then go for it. By all means, it's up to you. But there can be a risk to that. So really, it's up to you. Okay. The next one is, When I get married, my spouse and I will share a joint credit score and report. True or false? False, 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 false. Okay. Yeah. Very good. Very good. Yeah. So that is false again. Okay. Um, Basically, your credit score is tied to your social security number. Okay, so it doesn't matter if you get married, if you get divorced, anything like that. If you have kids, it's all tied to your social security number. So it doesn't matter. You're always going to have your own individual report. Now, I will say that absolutely, you and your spouse can take out a big loan together. You can purchase a home together. Anything like that. You can do that together. However, the results from that are going to be separate. Okay, so if you all pay back that loan together in a timely manner, cool. That's going to show on both reports. Okay, if not, if it's the opposite where you don't do that together, you don't make those monthly payments or whatever that is, and it looks bad on you, it's going to look bad for both of you. Okay. All right. Next one is my student loans are a form of credit and impact my credit report. True or false? True, 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 true. Okay. Cool. Yeah, that is true. Okay. Absolutely. Student loans are a form of credit. Okay, so basically that what that is somebody, right? Somebody is giving you money. Somebody is letting you borrow money, a loan, in order for you to pay your school, right? That's essentially what it is. And that comes at a cost, right? They're going to give you this money. However, nobody's just going to give you money, right? They're going to charge an interest to that. Okay, so that's where, that's what makes it an installment loan, which we'll talk about that a little bit later. But yeah, that is technically considered a loan. I'm sorry, credit, and it is going to be on your credit report. To this day, I have my credit loans all reported on my credit report. My loans, all my student loans that I've ever had, they're still on there right now. All right, cool. So thank you for participating in that. So now what I want to do is share a little bit about just getting into it from the very beginning. So what is credit? What is credit? So basically, it's an arrangement where that allows consumers to purchase goods or receive services whenever it is that you want, with a promise that you're going to pay them back later. The example that we used was student loans, right? They're giving you these loans right now so you can use them to pay for college, right? Of course, though, you're agreeing that you're going to pay them back later, right? Another example is if you get a credit card, right? Let's say I'm going to get a credit card right now and I'm going to go buy a big, a bed over at Target. Cool, I'm using this right now. Okay, I'm purchasing this right now, but I'm agreeing to the credit card company that I'm going to pay them back later. Okay, all right. So there are different types of credit. Actually, there's more than these, but these are the two that we're going to talk about because they're the main, the biggest ones, and I believe they're the most applicable to us. Okay, but there are several different types. One of them is revolving credit. Okay, so that comes in the forms of credit cards, service cards, things like that, to where basically what they're saying is if I apply for a credit card, they're giving me, let's say I qualify for $1,000 every single month. Okay, every single month, they're going to give me another $1,000. Okay, it's not that it piles up, but it's just that I'm allowed to spend another $1,000. Okay, and it all depends on how much I pay back. All right. And so regardless of anything, that's what it is. That's why it's called revolving credit. Okay. The other one is installment credit, okay, which we talked a little bit about earlier, which is like mortgage loans or student loans. It's a one-time payment that they're giving you. Okay. And basically what this is still the arrangement, right? Still saying like, hey, you got to pay us back this money, but this one's a little bit more intentional and careful. They'll say something like for example, I recently bought a house this last summer. Okay, I took out they gave me a pretty big loan. Okay, and so basically, again, there was that one-time loan, and they said, okay, you're going to do a 30-year fixed plan. Okay, so over the next 30 years, I'm expected to pay back that loan. Obviously, that comes with interest, just making sure that I make my payments on time. So it's monthly payments, but again, it's just that one time that's giving it. Okay. All right. So, what are the benefits of managing good credit? Well, for one, employers love to see that you have good credit. They love to see that you're responsible and that you're able to manage your money. Okay, so that just creates more opportunities, more likely to be hired, and yeah, it makes it easier for you. Okay. Also, if you do have good credit, you will potentially have lower interest rates. All right, whenever it is that you do get a credit card, whenever it is that you do buy a home or take out a car loan, something like that. Usually they're going to give you lower interest rates because you have that good credit. Okay. Also, it's easier to get approved. If you want to apply for a credit card, if you want to apply for a loan, then it's easier for you to get that because you have good credit. Okay. Also, better approval rates. If I'm applying for a credit card and I have low credit score, chances are they might not give it to me, but if they do, they're probably not going to give me that much. They're going to give me maybe, I don't know, depends on the situation, but $300, $400 as revolving credit. Okay. But if I did have good credit, then that's where they're going to be like, oh, okay, this person's responsible. I'm going to give them $1,000. I'm going to give them $3,000 as revolving credit. Okay. So that's where what I mean about better approval rates. General convenience is another one. Maybe you all heard in the past, like sometimes whenever you're trying to buy a phone or connect services, get Comcast or, something, get Dish, something like that. Sometimes I'll say like, oh, let's do a credit check. Let's do a credit background. And if you pass, then you can get your installation fee waived. Or right, like that first charge, it can be waived. First month is waived because you have good credit. Okay, so that's really convenient. That's really cool. It's fun. It's easier. They like to see that you have good credit. Okay, and then another reason to manage good credit or to make sure that you understand it and that you maintain it well is that you catch fraud and errors early. Okay, this is a really important one. You never know, right? Like in this day and age, technology is huge. There are a lot of like fraud things happening, people stealing identity, and so it's really important that you keep up to date with your report, with your score, so that you know that nobody is using your social security number or any of your information to take out credit cards, to take out loans, things that again are not. That you're not doing. Okay, so that's another really cool thing. All right. So in the chat box, or if you want to shout them out, do so. But what do you think are reasons why we want a credit card? Also, let me know if any of you here today have a credit card. Let me know. Let us know, and let us know why you have a credit card. You have 2 credit cards, Jonathan? Cool. I have 2 cards as well. Okay. How about the rest of you? Do you all not have a card? Do you want one? Do you definitely want to stay away from one? You want one? Okay. Start with a secured card? Yeah, absolutely. Okay, cool. So yeah, so there are, let me see if I accidentally skipped over one. let's see here. Oh, sorry about that. Let me start where I was. Okay. Cool. Okay, so why do we want or need credit cards? Well, it's a general convenience, right? It's just easier. We have money, even though maybe I don't get paid until 2 weeks. My credit card allows me to have money at that time. It's convenient for me. Again, employers and opportunities. We know that sometimes, right? And so that's why we want credit cards. A lot of times, maybe our parents will get one for us, or we just get one for ourselves, right? And it's just because of unexpected bills. Or sometimes we'll say like, okay, I have a credit card, but I only use it for emergencies. That's very likely as well. That can happen. That's a reason why we get credit cards. Another reason is to build your credit score. That is a way of building your credit score. Okay. And then, of course, just to having a financial record. You want potential employers or anybody else to see that you're good at managing your money. That you're able to do that. Okay. Let me see in the chat here if anybody wrote anything else. Okay. Yeah, keep them coming too. If you have a credit card, let us know why. Or if you don't, if you have strict reasons or past experience of why not to get one, then let us know that too. All right. So there are a couple disadvantages or things that you really have to watch out for when getting a credit card. Okay. A lot of times we can get carried away, right? And while we know it's convenient to have a credit card and that you have the money right there, a lot of times that can reduce our future income. Okay? Whenever we have this, we tend to spend that money right away. Even if we know we can pay it back later, cool, at least you're on top of it. But really what that means is that we got carried away and we spent all our money at the beginning of the month, okay? Which, again, can reduce our future income. By the end of the month, we're broke, right? And we have to wait again until the first to pay everything back, okay? Another thing is risk of major consequences if not maintained. By getting a credit card, you are putting yourself at risk, okay? Again, you have to be responsible for this. And if you're not, then that's where you can get to major debt and have to pay big interest charges and have a low credit score. And all of a sudden, you're paying back all your money, all of your income. It's just going towards interest payments and all the debt that you have, which sucks. You never want to be in that situation. Okay. Disadvantage, again, just a temptation. We often get carried away by going to Target or going to Kohl's and we're like, oh, I want that. And by having that credit card, you absolutely can get that, right? And so that can be very hard. And so it can be pretty tough, okay? And then there are expenses. A lot of times when you do have a credit card, there are expenses associated with those, depending on some things, which I'm gonna go about, talk about later. And then there is the risk of loss or fraud. Of course, every time you use your credit card, you put your credit card information on a purchase that you're doing for Amazon or a pizza delivery that you have. You put your credit card information out there, it's all out there. Okay, so it can get hacked, it can get stolen, so you're running that risk as well. So those are the disadvantages of using your credit card. All right, so there is also installment credit. This is the other form of credit that we're talking about today. Installment credit is basically, as I did mention a little bit earlier, it's simply a loan with fixed payments that's toward over the set period of time. As I mentioned earlier, the example I gave was my mortgage loan. Okay, so I won't say, I'm just going to say hypothetically, that I got a $250,000 loan. That's an installment loan. It's a one-time loan that they expect me to pay over a series of time. They gave me a 30-year fixed rate. Okay, so all of a sudden now I'm paying a lot of interest of course, right? Nobody's just going to give me $250,000 and say, here, we trust you, we believe you. No, no, no. There is an interest, a lot of interest associated with that. And there is even an insurance. There's a loan insurance associated with that. Okay, in case I can no longer make my payments, in case I lose my job, I want to sell the house or anything like that, there's that insurance. Okay, but that's basically what it is. This can be a car loan. This can be school loans, something like that, right? Where it's one time. And that's what currently you all have. So if you have student loans, this is what I'm talking about. Okay, you don't have to pay them back right now, but you will. Right? And it's not that they're going to keep charging you. Like you just took out that one $3,000 loan. You just took out that one $10,000 loan. Okay. It's not like they're going to keep coming every month. It's just that you will pay it by a certain amount of time. All right. So ways to establish credit. This is really good. So this is if you do happen to get a credit card or if you have one already, just starting, then this is what you can do. Okay. So, of course, you want to start with a job or have some sort of income. It's really cool. You can even get a debit card or what was mentioned earlier, like a service card or a secure card, to where it's not. It's just kind of holding you accountable, and it's really helping you get into the financial world, right? How to manage your expenses, things like that. Okay, but of course, you have to have some sort of income. Okay. You can definitely open up a checkings or a savings account and manage it regularly. And you can even take out a loan. Some of you all mentioned that you've taken out loans already. Great, that's how you start. That's how you start your credit. And again, if you manage those on time, you can, even though you don't need to pay them back right now, you're able to. You can pay back your loans right now. And that just helps, okay? My favorite one that I like to mention is that you can add yourself to a trusted line of credit. If you have a parent or a good friend, a family friend, somebody, right, that you really trust, they can add you to their line of credit, right? You don't have to have their credit card. You don't have to have their information. As long as your name is in there, you can benefit from their good management of their credit report and their credit score. Okay, so think about that. That can be a really good way for you to build and start your credit. All right. So here's some tips on managing good credit. Again, as always, like my most important emphasis that I always say is only use what you can comfortably repay. We mentioned about those temptations, like, oh, I can easily pay, like, oh, I can pay for this right now, I can do this, I can do this, but please only use what you can comfortably pay. Repay your full balances on or bills on time. Okay, so let's say I have a credit card and I spent $200 on it. Okay, the credit card company is going to say, all right, cool. Your minimum payment for this month is only $25. Even though I spent $200 in that month, I only have to pay $25, right, in order to like fulfill the request, right? However, my encouragement is that you always pay back the full payment on time. Okay, so if I spent $200, I'm paying back $200 that month, not the minimum payment. The reason for that is because if I do pay the minimum, the rest of that money I owe is going to be transferred over into the following month, and there's going to be an interest rate to that. Okay, so every time I make a purchase, when I have a balance on my account, there's going to be an interest associated with that charge. Okay, so keep that in mind. Please always just try to pay your full balance on time. Okay, keep your credit balances low. So one thing you should know about anything, your loans, your credit cards, is that even though they're giving me $2,000 on this loan, you should keep all your expenses to under 30% of all purchases. Okay, so like I said, if I have a a $1,000 loan, a credit balance, or not a balance, as I can spend as much as $1,000. Okay, I only want to spend up to $300. Okay, because if I go over 30%, there can be a charge there. Okay, so I'm going to try to do that. Even though I can, and it's tempting, I'm only going to try to do 30% or less. Okay, keep accurate records of charges, statements, and payments for sure. This is another way to stay organized, to stay on top of your credit report and scores, fixing errors. Right, the people that are putting together your credit report and putting in new information, they're humans, right? There's capacity for human error, and there can be mistakes. Okay, so if you don't catch that, if you don't fix it, chances are nobody is. Okay, or they don't even know it's a mistake. They're assuming that that's true. So that's why, again, you want to keep accurate records. Okay. One tip also is to not close old credit cards. Okay. The reason I say that is because a big part of your credit score is dependent on the length of your credit history. Okay, so I want to say 30 to 40% of your credit score is made up of your credit history. Okay, and so all of a sudden, if you close an old credit card, then that's no longer going to be applicable. Okay, so I'm not saying that you have to keep spending every single month. Not at all. All I'm saying is don't close it. If you no longer want that credit card, you no longer want to use it, don't use it anymore. Cut it up, shred it. Don't use it anymore. But just make sure that you don't close it, because again, this is how you build your credit score, and this is how they know that you have a long history of open credit, credit on your account. Okay, and then of course, as kind of mentioned earlier, is just the resolving errors promptly. If there does happen to be something that's wrong on your case, on your report, make sure that you address it right away. You talk to one of the credit bureaus and tell them that this is wrong. Make sure that you fight it. Because if you wait too long, then they're going to question you, right? They're going to kind of say like, okay, well, why did it take you 3 years? Why did it take you 5 years to fix this? You knew this was wrong 2 years ago, then why didn't you do anything about that? So that's where it comes a little tricky, harder. So that's why as soon as you see of any errors, make sure to resolve them quickly. All right. So understanding credit score. Does anybody here know what the 3 major credit bureaus are? You can put it in the chat or just say them. There's 3 credit bureaus out there that make up your credit score. No guesses? All right, cool. So I'm going to share these with you right now. So these are Equifax, Experian, and TransUnion. Okay, so these 3 credit companies are what make up your credit score. Okay, each one of these, they essentially function the same way, right? Essentially, they all have their, they're all there to look at your history, look at your debt, look at your payments and all that stuff. But they all have their own way of weighing out how that contributes to your credit score. So you'll see essentially they're pretty much the same as far as how they rank your credit score, but they vary just a little bit. Okay, so I'm not going to go into details exactly how they vary, but please know that they're changing. So the scores can be not too far apart, but they can be a little far apart based off certain things. Okay, so those are the 3 again that are going to make up your credit score. In understanding your credit score, it's always going to be 3 numbers. Okay, everyone in this room right now, whether you know it or not, you have a credit score. Okay, and I will say that in general, for most college students, it's going to be right around the 500, 600 level. Okay, because you're still at an early age where you probably haven't taken out a mortgage loan or a big, like a car loan or something like that. Maybe you took out some student loans, right? But maybe you haven't paid them yet. Okay, so that's why it's there. Like fair to good to poor, like I think it's always going to be right around there for college students in general. But this is what it's made of. Okay, so again, when Experian, TransUnion, and Equifax kind of like see all that stuff, they compile to make it one credit score, which is your FICO score. All right, so that one score is going to be within this. If it's above that 760, you have a really good credit score. Okay, 700, very good. Above 660, good, right? And again, these are the determining factors of what's going to qualify you for a higher loan, less interest, right? A higher, easier credit cards, things like that. Okay, so that's a way of keeping up with it. Now, of course, if you are if you have like a poor or very poor credit score, then that just shows how much debt you have, right? And lenders are going to see that. If you're trying to buy a car, if you're trying to get a loan, if you're trying to do all these things, they're going to be like, well, you have a credit score of 300. Why on earth would we let you borrow this much money? Okay, if they see you have a bunch of debt, then that's why it's good, as always, to maintain, have a good credit score. All right, so here's the breakdown of it. Okay, so the biggest one, the main one that I always want to share is your payment history. That's why I said don't close your credit cards. Okay, because the longer history you have, the higher your credit score. All right. If you open up a credit card right now, 10 years from now, awesome. You're going to have 10-year history, right? Payment history of that, right? But if you close it 2 years later, all of a sudden it's going to go back to 0 years. Okay, and that's why it's important, because it makes up the most of your credit score. The amounts owed is also a big factor. Okay, so this comes into, for example, my student loans. Okay, that is a form of debt. Right now, I do have a lot of student loans, so that's technically an amount of how much I owe. I don't have credit card debt, but for example, let's say I did. That is also another form of amount owed. Okay, so think about that. Those are the things that also contribute to my credit score. The length of my credit history is another one, which again, I kind of mentioned a little bit like payment history. If I've made consistent on-time payments, cool, then that shows how good I am at paying back my money. But also the length. If I have 10, 20, 30 years of credit history, then that means my lenders have more to go off of. They can see a lot more about like my history, so they can make better and more accurate decisions about me. Okay, and then new credit. If I do open up a new card or get a new loan or something like that, then that's another way that they like to see that I'm applying for new credit. And then the other one is types of credit used, like the variety of types of credit. So I think it was mentioned earlier that somebody has 2 credit cards. Cool. What other types of credit do you have? Right? And so like the various ones you have, I have 2 credit cards. I also have some student loans. Cool. Those are currently my 2 types of credits that I'm using. Okay. I also have my mortgage loan. That's a 3rd type. Okay. So yeah, that just shows, right, a little bit of variety. If I just have 1 credit card, I mean, that's not the worst in the world, right? But again, these people do like to see that you have various types of credits that you're using. Okay. All right. So staying on top of your finances. One thing that I like to do is check my credit report often. Okay. As I mentioned, I like to use creditkarma.com. It's free, and it's not going to impact your credit score or report. So I always like to look at it and just to see what is out there, what other opportunities I have, and again, to keep track of everything that's on there. If I see that there was a credit card opened under my name, then I'll see it on there. Okay, and I'm gonna combat that. I'm gonna say like, hey, that wasn't me. I've never had Capital One. I've never used that in my life. That wasn't me. And then they can look into that and they can investigate that. Okay. I will share with you all a story that happened to me, which kind of got me a little bit more interested in this topic. So back when I was in college, there were 4 credit cards that were opened under my name that were not me. And that was terrible. I did not know what happened. These cards were maxed out and there was interest occurring on those. And again, because they were opened up under my name, I was the one that was expected to pay those. So I did not know about this. I did not know anything about any of these. And this was before I found interest in Credit Karma and looking at all this stuff. But I went to the bank because I wanted to get a small loan. And so that's what I did. I went to the bank and I did not qualify. I was denied right away. And they're like, nope, you have all these cards, Capital One credit cards, Synchrony Bank credit cards. And I was like, wait, what? Like, I've never had a Capital One. I don't even know what that is. And they're like, yep, you have 4 maxed out cards. So that's why I didn't qualify. So it was like, oh, crap. Okay, something is wrong. And that's where I got a little bit of tip and some help and some support. And I learned about these different ways of checking your credit, maintaining those, avoiding fraud, things like that. So I looked at Credit Karma, and that's where I saw those cards that were maxed out. And I was like, dang it, if I would have looked at that before, I would have been able to catch that way in advance. And so that's why now I'm always on top of that. It's not only for keeping up with that, but it's also because I just want to make sure that there's no mistakes. And just me personally, I always like to see how my credit score is improving every month. I hate making late payments. I like making my full payments on time. And so I like to see how that changes every time I make a payment. If it's not every time I make a payment, but every so often my score does change. It gets higher. And so I just like to see that progress. Yeah. Okay. Here are some challenge questions, and I'm hoping, let's see if you all, oh shoot. Oh, let me see if I can go back here. Okay, so here's some challenge questions. If you can answer these, awesome. But what is the difference between a credit union and a bank? Does anybody know? What's the difference between a credit union and a bank? All right, so I see that banks are profit and unions are not. Okay, that's true. Who knows about the credit union on campus? What's the name of the credit union on campus at CSU? Canvas, yeah, exactly. Canvas Credit Union. Before that, they were called, what was it? Public Service Credit Union. That's what they were called, but they switched over to Canvas. So let's begin with what was mentioned. Banks are profit and unions are not. That's true. Okay, so banks are a little bit more, of course, yeah, banks are for profit. So they're a little bit more strict, and they're really all about like taking your money. I'm not a bank. I'm not a banker. I'm not for or against any banks, anything like that. But they can be stingy. They can find ways to try to steal your money. Okay, so they'll charge you. They'll higher your interest rate. Something happens, they'll charge you for it. Fees, all this stuff. That's how they try to get you. That's how they get your money. However, if you're responsible, you take care of that things will be a little bit better. Okay, but the difference is that credit unions they're not typically about that. Of course, they're not going to let you like take advantage of them and you take their money and never pay them back. Of course, they want to make sure that they're not losing out on money either, but they're a little bit more friendly. They're a little bit more supportive for you and your situation. They can give you certain checks and loans and things like that based off of certain situations you have. Okay, so it's really up to you. If you do want to get a credit card, you can do so from a credit union, or you can do so from a bank. It's really up to you. I would just make sure that you look into that. Look at your options and make sure you know what's best. Look at those differences. Okay? All right, cool. And then the other challenge question is, what is the difference between a subsidized loan and an unsubsidized loan? Anybody know that? Some of y'all took out loans, right? Okay. Okay, so basically, what I have here is subsidized. Interest is paid while in college. I think half of the time, and unsubsidized interest begins occurring as soon as a loan is let out or dispersed, including students who are enrolled. Okay, yeah. So if you all see, well, maybe not all of you, but usually for a lot of students, if you go on your financial aid package on RamWeb, you'll see that maybe there's some loans offered to you, right? You'll maybe see that you got some grants, maybe some scholarships, and at the bottom, maybe you can see that you got work study award, and then you'll see some loans in there, right? So there's unsubsidized loans and there's subsidized loans. So subsidized loans, I mean, you always want to try to avoid loans as much as possible. Loans suck, and they're not the best. However, they can be helpful. All right, I'm not saying don't ever take them out. Like, no, absolutely. They can be very helpful in helping you get through college, right? But try to avoid them as much as possible. All right. If you do have to take out a loan, please do a subsidized loan first. Do a subsidized loan first, because what that means is that there is no interest accumulating when you take out that loan. So a subsidized loan, there is no interest accumulating as long as you're in school. And for any of your loans, you won't have to pay back until 6 months after graduation or departure from the school. Okay, that's when the interest begins for those subsidized loans. Okay, so that's really cool. You're not paying any interest for a long time. Okay, if you have to take out an unsubsidized loan, then go for it. Try not to, but if you have to, go for it. An unsubsidized loan means as soon as you take out that loan, interest is accumulating. It doesn't matter whether you're still in school or not. As soon as you take it out, it's accumulating. Okay, so that's the difference. I hope you all remember that as you take out your next loan, as you, for when it comes back, time to pay them back. Loans, yeah, like I said, loans aren't the best. I always try to avoid them. I was very, very lucky to have graduated from CSU with no loans taken out. I hope a lot of you too. But if you do, then the benefit is that they're a form of credit. They can build your credit report and your score, right? If you pay back on time, if you pay more than just what's asked, great. The faster you pay them off, the better it'll be for you. Okay? But of course, it can be hard. I know, especially if you have huge student loans, that's where it can be very hard. It seems like you're making monthly payments, and month after month after month, you see that like your balance hardly went down at all because all you're paying is interest. So that's where you got to be careful. So just think about that. Cool. All right. Well, that does it. That does for my presentation on credit score, installment loans, credit, that sort of stuff. So now I invite you all to share. Like, if you have any questions, what you all yeah, what your thoughts were, or what other things that I can answer. Any questions? All right, let's see in the chat here. Yeah. Okay, cool. So yeah, I'll just say that I hope I'm not being repetitive, but um, if I guarantee you that at some point in your life, you might not even be thinking about it right now, but one day from now, you're going to get married. You're going to want to purchase a home. You're going to want to get a car, a brand new car. Maybe you already have one, but you're going to get a new one. You're going to have kids, maybe. And this is where it's going to be very essential. Okay, so what you're doing now financially is going to impact what you qualify for in 10 and 20 and 30 years. Okay, so please make sure that you are focusing on that and you always stay alert, and that you're keeping track of all your expenses. And it doesn't have to mean that like you jot down every single time you make a purchase, but just keep records of your monthly bills, or at least you know where they are at, making sure that there's no errors or anything in your credit report, something like that. So just do that. I guarantee you that financially you'll see it's going to be a lot easier for you later on. Okay. Any other comments or thoughts or questions? Cool. Okay, well, that does it again. Thank you all so much for joining this. If you do have additional questions, you can always email me or stay on the chat. But please make sure that everybody please submit the CLF evaluation. So that was posted in the chat at the beginning. If you want me to post it again, I can do so. But make sure to do that in order to get your Thrive CLF credit. Okay, if you're all done with that, make sure to submit it. You're all good. You can log off. Again, if you have additional questions, stay on. I'm happy to answer anything. Thanks, everybody. Have a good day. Hi, Shirley. Do you have any additional questions or comments?